If you view the Value Trend video channel regularly, you will know that in late 2024 and early 25, I have been talking about the commodity trade, specifically about the energy trade, as a good potential play in 2025. In fact, if you click on this link, you'll see a video called Time to Buy Oil that I produced the first couple of days in January. I was focused at the time on the producers, and I'll talk in a minute about why I think that's still a good trade. But I want to talk about another trade today that I think is going to be very strong in 2025. In fact, may even be a better trade than the energy trade. And we'll talk about that in just a moment. Now let's take a look at the energy trade. As I mentioned, I was suggesting that producers maybe have a good potential for going up in 2025. And in fact, if we look at this chart here, I was recommending that people take a look at the producers in late 24, early 25. And I felt that the producers would hit the top trend line somewhere around $18 or so on the XEG iShares Canadian energy units before there would be a pause. Well, in fact, we got that rally, we're getting that pause, and the next step for the energy producers is to break out in 2025. We need to break that resistance line. I do think that line is going to be broken. There's many factors involved with that belief, but one of them is seasonality. Typically, energy breaks out after February. There's actually a lull on energy prices, and then they pop after February because the producers are starting to stockpile energy in lieu of the upcoming driving season, which in North America, as the biggest user of oil and gas in the world, is looking forward to their summer vacations and larger driving scene overall. Let's pull the curtain back on the next sector that I think is going to move strong in 2025. And that is that certain base metals, and I underline the word certain because I think there's some very specific base metals that we should be looking at, and rare earth metals. So let me give you the argument behind why I believe that. Well, everybody knows 2022, 23, and 24 were all about technology and the AI movement. Behind that is robotics and the application of artificial intelligence to those units. I'm going to tell you that robotics, together with artificial intelligence, are going to act and already are acting as a driving force behind cost reduction, operational efficiency, and actual competitive positioning. In fact, companies that are not using robotics, whether it's in their factories or their self-driving cars, are going to be left in the dust as the consumer looks forward to faster, more efficient companies to do business with. Let me give you an example. This is a real life example that I came across a couple of years ago. Now, as you guys know, I'm a technical analyst and a financial portfolio manager. So I operate in the financial markets. We trade stocks, bonds, commodities, that kind of thing. Well, there's other types of portfolio managers out there. And a friend of mine is a real estate portfolio manager, in that what he does is he works on behalf of large pension funds, and he manages their real estate portfolio of commercial rental properties. So a lot of companies, large companies, instead of buying, for example, and operating a warehouse to work out of, they will rent or lease this property, and they will have a large investor, such as a pension company, who owns the property, and they are merely the leaser of it. Well, a good example, as a friend of mine was telling me, who's in this business, is the company in the United States named Kroger. You might have heard of it. Kroger has a really unique platform. They don't have it in Canada yet, but what they do is you can go online and order a full pallet of groceries. So it's a little different than, say, Amazon, where you only get a choice of mostly dried goods and non-perishables. Kroger, you can order The same thing as going to your local grocery stores, all online, and it'll be delivered to you very, very quickly. Well, you can order a, a, a case of eggs and a bottle of milk and some chicken and special K cereal and a bag of flour, and it'll all be put together and delivered to your doorstep within 24 hours. Well, how do they do that with the thousands and thousands of orders coming into Kroger all over the United States? Well, as my friend explained, what they do is they have robotics in the company. In fact, the factory floor, the warehouse floor, I should say, doesn't even have any people on it. It's 100% robots. So the orders are coming in via computer. The robots get the orders and go and individually pick your grocery bill. So your grocery list, brings it back, packages it, labels it, and sticks it on the truck. Nobody goes on strike. Nobody goes to lunch. Nobody calls in sick. And they can move faster and more efficiently than any human being can move. So, this is a real case for efficiency where it's a job that is rather repetitive and yet still requires an intelligent, if you will say, approach to picking those groceries to meet that particular customer's desires. It's an amazing system, and the whole floor of that warehouse, you will see robots ripping around and filling these orders and loading them onto trucks in just this incredibly efficient manner. So that's a good example of how robotics are being used these days. And I believe Elon Musk was saying by 2040, almost every company is going to be using robotics in a major way. So, because the AI trade and robotics are kind of a well known thesis on the street these days, we want to take a look at the backdoor ways of playing that trade. And one way is through base metals. Think of it. If Elon Musk is right, and in 15 years or so, we're going to have a large component of our economy being driven by robotics and artificial intelligence, what's used to build robotics? Metals. What's used to operate the computing efficiency of the your search engine that you use when you're using AI on your local Google search engine, or when you are using a self-driving car, even a lot of the self-driving implements in your car right now, such as cruise control, are all part of an artificial intelligence type of program. Well, base metals are used to build products, but rare earth metals are also used in the process of the batteries and the chips and the technologies behind artificial intelligence. So these are products, let's say, base metals and rare earth, that are not yet being bid up along with the development of AI and robotics. And there is where I see the trade, because the market is kind of ignoring, to me, a very obvious potential as this field grows. I'm going to start off with a chart of the base metals. And that's really just looking at the metals themselves right now rather than producers. We'll look at the producers in a second. What you can see here is a triangular type of consolidation. Now, if you take my technical analysis online course, you'll know the different types of consolidation and why this type of formation is very exciting. The bottom line is you've got higher lows and lower highs, and that means the market is coming to a consensus on the price of these metals. Well, the market doesn't like to stand still, as we can see. It likes moving around. And when it consolidates for too long, it always either breaks up or breaks down. A triangle is a perfect example where the market is coming to a point of almost static movement. And eventually it's either going to break out to the upside or down to the downside. And my view is I think we're going to see a break up. Now let's take a look at the producers. This is an ETF that I've traded multiple times over the past number of years. Now, I don't own the position right now, but I'm again looking to get into the position based on what I'm about to show you now. So if we look at the BMO Base Metals ETF, ZMT, you can see that it's been again, consolidating. It's going sideways. It's moving in a swing trade. Now, for short-term traders, they can look at trying to trade that swing, but I'm looking for the bigger picture, which is a move outside of that consolidation. Well, if bases are broken, when you see a consolidation and they break out, this can be very, very powerful because there's lots of clean air up here, isn't there? There's nothing in the way of this ETF in this case to move higher after we take out the resistance that we're seeing on the chart right now. So whenever you see a consolidation and a breakout with no further resistance ahead of it, it can be very, very powerful. And I think based on my case surrounding robotics and AI, there's a potential for that to happen. So let's talk about then my favorite metals within that larger base metal producer chart we were just looking at. The three that are largely used within the AI and robotics space, particularly robotics at this point, is copper, aluminum, and steel. Now, here on the description, I've listed using AI the way these metals are used within robotics and AI. But I'm just going to let you explore that on your own. Just understand, I want to focus on these three metals. So let's start with copper. This is the copper chart itself, the metal copper. And you can see once again, another type of consolidation that I like, which is a descending triangle. So here we have the lows staying flat. You're not making lower lows, but you're making lower highs. Again, it's a consolidation pattern. We know that because you're not making a series of lower highs and lower lows, which you get in a downtrend like this. Instead, we've got a base where the lows are staying the same. Yes, the highs are getting lower, and that means again, the market is coming into a point of static movement. Eventually, it will break out either to the downside or to the upside based on what I'm seeing fundamentally. I think it'll break out to the upside. How do you trade this stuff? You wait for the breakout. You don't assume, you wait for the breakout. But if it does break out to the upside, you can be absolutely sure that I will be in on this trade. Now we're going to look at a copper mining ETF. In other words, the producers, which is the way I usually like to play it. So this is again illustrating pretty much the exact same basing pattern that you just saw on copper itself. Not a big surprise. Again, I think that it's going to break out. You have to wait for that breakout. You don't buy until you see a confirmed breakout. I'll repeat that over and over until you get sick of me saying it. This is the COPX, Copper Miners ETF. It's the only one that I'm aware of that's a pure copper ETF, but you'll probably be able to find more if you search the internet, use some AI and try to find it. Now let's talk about the next metal, aluminum. Now, I really like this chart. I think it's got lots of potential. In fact, I'm on the verge of buying into this metal in the next number of days. I have yet to discuss this with my CFA, portfolio manager associate, just to make sure we're doing things both fundamentally and technically, but really like the aluminum trade. Why? Well, lower highs, lower lows. There's an uptrend. So what we try to do within an uptrend, and if you view my technical analysis basics video produced recently, you'll see the definition of an uptrend is higher highs and higher lows. And how we trade those is we wait for a bounce off the trend line, which aluminum seems to be doing, and then we wait a couple of days and then we buy. So I'm actually on the verge of looking at an aluminum trade, but I haven't bought any yet. This is the Dow Jones Aluminum Index, so it's the index of producers. Next trade, steel. Now we saw that steel is used within the robotics trade, and that's an obvious one. The only thing about steel is that the most recent low got lower. However, there's a pretty big base of support that comes in at around 55. So this is SLX, which is the Van Eck steel ETF. It's again the producers. So I'm seeing a bounce off of this prior low around 55, and we want to make sure that that stays there. But if it does, then you'll see a move probably to around 70. Not a bad trade. So I would personally give it a bit of time before I bought it. I don't own this ETF, but again, it's an interesting looking trade. Now we're going to finish up with the rare earth trade. Now, I find it kind of ironic that investors are so excited by the AI trade and the robotics trade, and yet they're almost completely ignoring the very components that are necessary for these other two exciting developments in the world to actually exist and be produced and operate. So I think that rare earth metals are going to be a real opportunity based on the need for, battery technology and chip technology, all kinds of needs. And the rare earth metals come into play when these sources are being developed. I think the easiest way to trade the rare earth play is through an ETF. And probably the best known one is, again, VanEck ETF. Its ticker is REMX. Now, I don't own this trade right now, but I think it's beginning to show a possible setup. Now, just to look at the basics of technicals, we know it's been in a downtrend. So we can, when we draw that line, and maybe I'll erase that line because I didn't do a great job. When we draw that line, you can see that it's now testing the downtrend line. Now, you guys know you don't buy into a downtrend. Hope that makes sense. You don't catch a falling knife, as they say. But the definition of a downtrend is lower highs and lower lows. So that is what we have been getting. But interestingly, early signs of a potential turn for the rare earth ETF is that we've just put in a higher low. Now, we have yet to break that trend line, and we have yet to break the last high, which is around 47.5. And again, I refer to my technical analysis basics ETF for you to understand these principles. But if we see this ETF break the trend line and break its last high around 47.5, and sustain that for more than just a couple of days, then we may have a signal to go into this sector. I'm on hold with this too. So in conclusion, one of the things that I am trying to do through this video series is not just talk about what has worked, but I'm looking at things that may work in the coming months. The trick is to keep your eye on the ball and be ready to move when something's setting up. I think that metals are potentially setting up, especially when you took a look at some of those base metals that we talked about and the triangular formations, which are actually quite accurate when they break out. You need them to break out, and you need them to break out to the upside. Do not even look at them if they break out to the downside. But I think based on the argument behind the need for those metals in development of robotics and AI, there's a good strong chance that sometime this year you will see that breakout happen. And I think that the rare earth metals are also setting up, although not quite so neatly and tidily. But if we do see that breakout on the rare earth metals, as I described in the video, we could also see an opportunity in that sector as well. Either way, I hope this gave you food for thought. These aren't trades that I would be looking at today, but they're most certainly things that I would keep my eyes on for a potential opportunity that could be quite large in 2025. Thanks for watching.